everyone, Jai Hind and welcome to the platform of StudyIQ IAS in English. My name is Bhanwar Singh. I'm extending 115th course and qualified civil services in 2012. And I welcome you on the platform of StudyIQ IAS in English. And today we'll be talking about or discussing about RBI Retail Rupee. Alright, what it is, and we'll be analyzing the complete thing. Now, this had been in news recently because RBI is scaling the retail pilots to more than 15 banks and for the millions of the user when it comes to the retail rupee. At the same time, there is a proposal to link the central bank digital currency for the 2026 summit of BRICS as well. Also, there is also one of the important factor, and that is that it aims to counter the current volatility of the private cryptocurrencies as well, and that is why this is one of the sovereign alternative that is there when it comes to cryptocurrencies. As well as there will be a complete transitioning from the payment interface to the digital currency itself, and this is what we are talking about, the retail money or the retail rupee that is the digital cash in itself. Now, what exactly is this central bank digital currency or E-Rupee? So, this is basically a digital avatar of the cash itself. It is a digital form of the legal tender that is issued by the RBI. So, you have notes, you have the bank notes which will be there in your pocket. So, these are basically the physical legal tender that had been issued by the RBI. And in the same manner, the E-Rupee or the CBDC, that is the central bank digital currency, is also just the digital form of that legal tender that is there in your purses right now. Now, over here, there is the direct liability of the central bank, and it is not the liability of the commercial bank when it comes to E-Rupee. Also, it is exchangeable in 1:1 format with the physical cash. If you have E-Rupee of 10 rupees, you can exchange it for the physical 10 rupee note as well. And there is no bank account that is needed. It can be held in the digital wallets like just you have the physical cash in your own wallets. Now, when it comes to the evolution of money in India, so ultimately right now when it comes to the evolution, so the evolution started from the barter system that was there in the ancient time, and then there were the ancient coins which were minted. Then came the fiat cash, and it was the paper notes that were printed according to the RBI Act of 1934. Later on, the electronic transfer of the money started with the implementation of the NEFT, RTGS, as well as the cards, that is the debit cards as well as the credit cards which were there. And then came the era of the UPI, that is the instant interbank layer that was started in India in 2016. Now, we are talking about CBDC, that is the central bank digital currency, and it is a programmable sovereign cash, and it had started in India from 1st of December 2022 itself. Now, when it comes to the difference between the UPI, the CBDC as well as cryptocurrency, so when it comes to physical cash, the physical cash is basically where there is the physical liability of the RBI that is there, and there is the physical transfer that must happen for the settlement of the dues. All right. At the same time, it is government backed value guarantee that is there when it comes to the physical cash. At the same time, when it comes to the digital payments, so over here, this is because of, or the nature of the asset is that you have a bank balance in the commercial bank, and that could be transferred, and the transfer happens through the bank clearance, that is again a multi-hop channel that it utilizes. Now, the digital payments or the UPI are basically bank-backed payments which happens, and again, when it comes to the digital cash, the payment or the physical cash and the digital payments over here, they are not programmable. Now comes the cryptocurrency. The cryptocurrency is basically the private decentralized token that is there, and there is a blockchain consensus that is taken into the account while going for the settlement of the cryptocurrency. Also over here, the complete cryptocurrency, it is dependent upon the market, and the market decides what the value of that cryptocurrency will be. And again, it is programmable, and it is highly programmable with the smart contracts which are there. Then comes the digital rupee or E-Rupee that we are talking about. It is the digital or the sovereign digital token that is there, and over here, the payment, it occurs directly from wallet to wallet without any of the multiple hops in between. It is again a legal tender So there is the value that is given, or the value guarantee is of the RBI or the Reserve Bank of India, because it is a legal tender under Section 26 of the RBI Act. And here it is also programmable, but at the same time with the managed smart contracts itself. Now, when it comes to the CBDC, so what is the need right now? You must have seen while you are making the payment through the UPI. All right, sometimes what happens, the payment, it gets stuck. All right, and then there is a reversal that happens in a day or two. So ultimately what happens is, in the digital routing, is that there is a sender. The sender is you. You send a money through the sender's bank server, which then goes to the central clearing system and then to the receiver's bank server. And then the receiver gets the money. So there is multiple hops which are there, and it relies on the intermediary, uptime, as well as the settlement batching that is there. So this is how the UPI works. But when it comes to the direct token transfer of the E-Rupee or the digital currency that we are talking about, so over here it will happen that there is your wallet and the receiver wallet, and there is no intermediary that is in between. So there is zero intermediary hops, and this will be instantaneous, irreversible transfer of the asset itself. And that is why it is very, very important that we needed the CBDC that is there. Now, according to Akshat Garg of the Choice Wealth, he says that for investor institution, this architecture fundamentally eliminates settlement friction and the counterparty risk as well. At the same time, the need for the CBDC or central bank digital currency was that it reduces the complete burden or the cost of the cash printing. When it comes to the printing of the cash in just fiscal year 2022, it was 4,984 crore rupees. So ultimately it also reduces the cost of cash, and also it strengthens the monetary policy transmission in the complete Indian economy as well. Now the tech pillar is the blockchain as well as DLT. DLT stands for distributed ledger technology that is used for the transparency of the complete network. Again, this is programmable. That is, if the intended use is there, so it could be programmed accordingly. Like for example, the subsidies which are given through the direct benefit transfer or DBT, they can be programmed to be spent only on the specific items. Like for example, government wants the subsidy only for fertilizer. So again, it could be programmed. And this is like a token, this is a token based system. That is like, for example, if you have 500 rupee note, the digital token is unique, and the same way that you have 5 rupee note in your purse, it cannot be duplicated. Alright, so there is the complete unique code that is there and unique token that is generated which cannot be duplicated, and that is the security feature that this complete system has. But at the same time, everything has challenges and the risk as well. The first of the challenge that E-Rupee or the digital currency has is of cyber security. That the risk of the systemic hacks or the technical glitches that may affect the entire economy at once. Also, there are the risk of the disintermediation, where if the people, they will move all their deposit to the CBDC. Suppose everybody will move their complete deposit to the CBDC, so what will happen? The banks, they will lose their lending power, and ultimately that will lead to credit crunch in the society and in the economy. And again, that is disastrous for the Indian economy as well. Also, there is digital divide when it comes to Indian society. We have the people who are not digital literate, and ultimately there is need for simple UX as well as the offline modes for the rural and the unbanked population that needs to be seen, or it needs to be researched upon. At the same time, when it comes to this digital currency, there is also de-dollarization that is in the focus, because ultimately when it comes to CBDCs, it will allow the countries to settle their trade directly, and this will bypass the US dollar dominated SWIFT system that is there. And also there is the impact that it will have on the BRICS nation as well, because this E-Rupee, it could become a medium for the regional trade, reducing the exchange rate risk and even the transaction fees in the international corridor. And that is why this is important for the geopolitics and for the cross-border trade as well. Now there are two different digital currency that we have. We have for the retail CBDC. This is for the general public, merchants and the businesses. And over here, the objective is for the everyday transaction that happens, just like you do your UPI, as well as financial inclusion and the cash replacement. When it comes to its impact on the scale, you can see that the circulation, it has crossed 1,016 crore rupees by March 2025, and this pilot had been active since 1st of December 2022. Now, there is wholesale CBDC as well, or the wholesale digital currency. Over here, the audience or the intended user are the restricted ecosystem of the financial institutions, that is banks and the intermediaries. Alright, over here, the objective is to streamline the interbank settlement that happens, also mitigating the large value settlement risk as well. Right now, it is currently operating with the 16 of the exclusive institutional participants, that is banks, which are there. Now, it is very important because when it comes to the banking framework, this digital rupee or the digital currency, it happens or it helps with the fund settlement for the secondary market transaction or the government securities. The benefit is that it preempts the need for the settlement guarantee infrastructure or for the massive collateral as well. The second thing is that it leads to settlement of the interbank lending and borrowing or call money market as well, benefiting the instantaneous finality that reduces the intraday liquidity requirements between the banks. Also, there is the issuance and the settlement of the certificates of deposits or the tokenized assets that could be done by the E-Rupee, and ultimately there is synchronization of the asset transfer with the payment, that is delivery as compared to the payment, and ultimately that secures on a verified ledger, and that is the benefit of using the E-Rupee in the institutionalized framework as well, that is between the banks as well. Alright, so that is the E-Rupee or the digital currency that is managed by the RBI. Alright, if you have any questions or any doubts, and also if you want to discuss further, you can write down in the comments. At the same time, if you are preparing for the civil services for 2027 or for 2028, you can join the GS Foundation batch, that is resolution. And one more important announcement that I have to make, that is that we are moving towards smart revolution for your preparation of the civil services. Now, what this smart revolution is, you will come to know about this on 22nd of May. So be live at 7 p.m. on our channel so that you do not miss the important announcement about what this smart revolution is and how it will help you in your preparation. At the same time, do not forget that this is the code that you can use, BRS Live, for the maximum discount on all the UPSC courses which are available on our StudyIQ platform. So that would be all. Thank you. Bye-bye. Take care. Jai Hind. But do not forget to like, share as well as subscribe to our channel so that you do not miss any of the future updates. Thank you. Bye-bye. Take care and Jai Hind.